Do you remember hearing the bold promise, no tax on Social Security benefits for seniors? It echoed through campaign rallies across the country, Arizona, North Carolina, and even nationally televised interviews. For millions of retirees struggling to make ends meet, this felt like a lifeline. It wasn't just a policy. It was a symbol of relief and recognition after years of paying into the system. But now that the election is over and the House has unveiled its official tax and spending plan, that promise looks more like a political slogan than a real solution. Let's dig into exactly what happened and why so many seniors are feeling misled. What Trump repeated over and over on the campaign trail. Donald Trump made eliminating taxes on Social Security benefits one of the loudest promises of his campaign. On October 13th in Prescott Valley, Arizona, he told supporters, "No tax on Social Security benefits for our seniors, and you deserve it." Just weeks later in Greensboro, North Carolina, he doubled down. "We will have no tax on tips, no tax on overtime, and no tax on Social Security benefits for our seniors." Even after re-entering the White House, Trump continued to repeat the same line on national TV, telling Sean Hannity, "No tax on Social Security benefits for seniors, which is so great." The message was clear, simple, and emotionally powerful. Seniors were told they would no longer be taxed on the benefits they spent decades earning. Now, let's talk about what's actually in the bill. Instead of eliminating taxes on Social Security benefits, the House proposal, which Trump supports, includes something much smaller, a $4,000 tax deduction for seniors. But don't let that number mislead you. This deduction only reduces the amount of income that's taxed, not the taxes themselves. For the average retiree, it adds up to a real tax break of less than $500. That's a huge drop from what was expected. In fact, this small deduction only scratches the surface of the financial burden many seniors face. Here's where the numbers really tell the story. If Trump's original promise had been fulfilled, some retirees could have saved thousands of dollars. Let's take a higher-income senior who receives $45,000 a year in Social Security benefits. Under the full tax elimination promise, that individual could have saved as much as $14,153 per year in taxes every single year. Even middle-class retirees, such as someone earning $100,000 in total income, with $45,000 from Social Security and $55,000 from pensions or 401ks, would have saved over $8,400 annually. In sharp contrast, under the current $4,000 deduction plan, these retirees would now only save $1,480 or $880. That's a massive gap between the expectation and the reality. For retirees with more modest incomes, the impact is just as disappointing. Someone who receives $24,000 from Social Security and another $30,000 from other retirement sources, a typical case, would have benefited by $1,356 under the no tax promise. But now, with the $4,000 deduction, that same person gets just $480 in tax relief. It's worth noting, many of these moderate-income retirees are the very ones who would have gained the most from the original plan. They have enough income to be taxed, but not enough to absorb that loss easily. For them, this isn't just a broken promise. It's money they were counting on. Surprisingly, the only group that might actually benefit more under this new $4,000 deduction than under the original no tax on Social Security promise are people who barely collect Social Security at all, those whose retirement income comes mostly from other sources. And that raises a serious question. Was the bill really designed to help the average retiree, or just to sound good on paper? Economist Jason Furman calls it out a bait and switch. Jason Furman, Former chief economic advisor under President Obama, and now a Harvard professor, put it bluntly. It's mostly a bait and switch. He explained that the overwhelming majority of Social Security beneficiaries, roughly 40% to 50%, already don't pay taxes on their benefits. So, the big promise would have helped only a specific group. And now, with this new bill, even that group is being left behind. One big mystery remains. Did Trump actually understand the details of what he was promising, or was it just political showmanship? Based on his past record, it's worth questioning. During the 2017 tax cut bill, his main concern wasn't average Americans. It was making sure the lower corporate tax rate applied to his personal LLCs and business empire. Now, with this new proposal, his team has yet to respond to media questions about the discrepancy between what was promised and what's in the bill. So why is this issue so complicated? Taxes on Social Security benefits depend on something called combined income, which includes your wages, pension, IRA withdrawals, and a portion of your Social Security benefits. Let's say a retiree receives $24,000 from Social Security and $30,000 from wages or 401k withdrawals. That's $54,000 in total income. But in this case, $11,300 of the Social Security payments would be counted as taxable income, giving them a taxable income of $41,300. Compare that to another retiree with the same $54,000 in income, but where $45,000 comes from Social Security and just $9,000 from other sources. Only $3,250 of their Social Security would be taxed, and their adjusted gross income would be only $12,250, low enough to owe no income tax at all. The ones hurt most: seniors with modest Social Security and moderate income. Here's the real kicker. Those who would have benefited most from eliminating Social Security taxes, like the first retiree in our example, are the ones losing the most under this new plan. It's those who worked modest jobs, earned less, and now draw lower Social Security payments, but have just enough income to be taxed anyway, who are being left behind. And for the retiree with $54,000 in total income, but with only $24,000 coming from Social Security, that person will get just $480 in tax relief under the new plan, compared to $1,356 under the original promise. When a candidate repeats the same promise over and over, especially one that impacts millions of seniors, there's a reasonable expectation that they'll follow through. But what we're seeing now isn't tax freedom. It's a watered-down deduction that helps far fewer people than the promise suggested. For many retirees, especially those living on fixed incomes and watching every dollar, this isn't just politics. It's personal. If this breakdown helped you understand what's really in the Social Security tax proposal and what was left out, please hit that like button and subscribe for more clear, honest updates. This is about your retirement, your money, and your future, and we're here to help you navigate through the noise.